Welcome to another episode of Purchase to Profits. I'm Seth Ferguson. Make sure you hit the subscribe button so you don't miss our daily interviews with successful real estate investors. And I've put together the top 7 key market drivers I look at when I'm analyzing a real estate market. Go to sethferguson.org to download your free copy. Our guest today has been a part of numerous residential and multifamily acquisitions in both fund and syndication structures, is featured on Bigger Pockets, and hosts his own podcast. Dino Pierce is the CEO of Edified Equity. Dino, welcome to Purchase to Profits. It's great to have you on the show.
Yes, thank you for having me. It's a pleasure to be here. I really appreciate it.
No, I'm really looking forward to this. So let's jump right in and talk about your real estate goals right now.
Yeah, so my goal is pretty simple. I want to build over the next 30 years, and I say 30 because I'm conservative. It's probably more like 35 or 40. But I want to build a solid portfolio of cash flowing multifamily assets. In the target that we focus on today, I don't believe that's going to change. We'll see what happens. 30 years is a long time. Yeah. But what we look at right now is B and C class safe, affordable workforce housing. And the reason that I personally like that is because, right now we're in a position where the demand is outpacing the supply. That's always a good problem to have when that's your asset of choice. But no matter what happens, and just the way that they're built, the developers are developing A class. They're not focusing on B and C. And by the way, when I say C, I'm talking about vintage, not C as in like borderline, property management companies scared to go collect rents, things like that. So I'm talking more of vintage, more of age. And anyway, it's one of our basic human needs. We always are going to need shelter. And I think as we transition into a European model, into the renter's nation that America is becoming because of millennials, baby boomers, people are doing it out of necessity. And there's a whole other section doing it by choice that we're looking in more. We appreciate now, I think some appreciate more experiences than things. So as we transition, I think that demand is going to stay high. So if we have that asset class, we're going to be in a good position.
Yeah. And like you mentioned, the absorption, like any new product that hits the market is being absorbed right back in. And there is that lack of, new units coming on market online to meet that demand. So, and when you said you want to build that solid portfolio, what does that really mean to you? Like, do you think about it in terms of dollar volume or income? Like, how do you frame that in your mind?
Yeah. That's a great question. So in my mind, it's more of a legacy accomplishment for me. It's something that I've put my mind to. It's something that I want to develop. And I also want to show other people, whether it's, people viewing your podcast, reading a blog, watching my podcast, my children, whoever, I come in contact with, they see me put it out there and actually accomplish it. But for me, it's not a number as far as like 30,000 doors over the next 30 years. It's more of a, in our business, we throw around the term passive cash flow. And if you're on the active side as an operator, it's not really passive, but it can be more passive than if you set it up the right way, than jobs, put it that way. So I do have a number in my head that I would like to get to, but at the same time, it's like for me, it's more running the marathon and doing it for 30 or more years and seeing what the outcome is. Because here's what I know. If you have a goal and you have a 30-year runway ahead of you and you never get off track, you're going to be able to amass something that is, it's going to be a feat that is notable. And that's it. So I don't know exactly how many doors that is. All I know is if you don't stop, you're going to do something great. And that is more of my goal.
Yeah. And you mentioned it, you likened it to like a marathon. And when you're doing those long distance events, it's more about just the mental struggle doing like 1 foot ahead of each other rather than thinking about the finish line, because you'll get pretty tired, but by like mile number 2. Did your kids have anything to do with it in terms of the legacy aspect?
Yes, for sure.
Okay.
I mean, so I want them to see, because they're young. My oldest is 10. My youngest will be 4 in August. And I have one in the middle that is 6. And they hear me talk about, I'm an investor, so they know multifamily, they know what apartments are, they understand inflation and cash flow, they hear me talk about taxes, and I purposefully let them, when I'm on the phone with an investor or a partner, I let them listen, and then I want them to ask questions. Daddy, you said this, what does that mean? So it's definitely, that is in large part why I'm doing what I'm doing. Is part of teaching them how to have the ability to stick to a goal. So I don't know if they are going to be involved in multifamily. I don't know. I hope they will, because it's something obviously I believe in wholeheartedly. But if not, at the very least, I showed them how to do something and for 30 years or longer. Like I say, I think it's going to be longer than 30 years. But so whether, my daughter loves dancing, and I would honestly like her to get involved in multifamily and experience, instead of working towards a pile of cash that she can retire one day and live off of, I want to teach her how to take her money, put it into something that cash flows, gives her phenomenal tax benefits so that she can be a dancer and not worry about what she gets paid dancing at the local dance house in Denver, Colorado, because she set herself up already. So if I can teach them or anyone else the benefit of setting themselves up through investments, so that they can truly do what they want to do in life, that is definitely a why. And that brings something real quick. I want to throw this in so I don't lose it. But I saw, this is probably 4 years ago, I saw a little kind of a comic cartoon, and it will never leave my brain. It was 2 kids playing with things kids play with, like an airplane, a train set. And one says to the other, so what did you want to do before you gave up? And I was like, wow. We don't think about it like that, but people let go of what they really want to do to go get a job so they can make ends meet. And I really would like to break that cycle for people.
Yeah, no, for sure. And so what was it about? So who in your life, or what in your life allowed you to kind of expand your mind and see the opportunity in real estate? Because most people don't grow up thinking, hey, I want to be a syndicator or a real estate investor.
So actually, I think it started with business first. So I was raised by people. So now it's kind of like you hear people talking about, you don't have to go to college. So I was raised by people that did that before it was like the cool, trendy, and maybe smart thing to do. My grandfather built an empire. And you're talking about a gentleman who, his parents never spoke English. He showed up kindergarten day one, didn't speak the language, quit school in the 5th grade. At the age of 13, him and his father were out fishing. That's where he started his in the fishing industry. His father died of a heart attack. This 13-year-old kid drove his father in, and that guy, his name is Nolte, went on to become a self-made millionaire. And I'll tell you one of the best things, though, being Nolte's grandson, but he had marinas, an ice house, developed self-storage. He had some single family as well as some mobile homes, a small motel, a marina, a seafood shed, a tugboat company, you name it, this guy did it. And so my parents were young. I had teenage parents, actually. My mom had just turned 18 when I was born. And so I got to see a lot of this happen. As I was growing up, Nolte was developing his empire. When I was 13, my parents, they said, no more baseball, no more bitty basketball, no more skateboarding. You are going to work with Nolte. And this is what I'm getting at. One of the best things that Nolte did for me was, because I was his grandson, he was harder on me. I worked the longest, the hardest, and I got paid the least. So instead of saying like, oh, here's the owner's grandson, it was like, let me beat you up the most, because that's how I made it. and I love that. I really appreciate it. I was actually just thinking about that today. It's something different, but the way we were brought up, we were told before we went into the grocery store, my brother and I were like, you don't even ask. If we pass near the toy aisle, You don't even ask. And I was like, that taught us so much patience. Like, and we didn't, like, we did not ask. So I think it started in business first. Then it carries on through. So all my aunts and uncles, they had their own business. My parents had their own business. So I was raised by entrepreneurs. It actually, in all honesty, it took me a while to figure out, like, going to sleep by friends' houses that, oh, your mom, like, your dad goes to work. Your mom goes to work. I didn't even understand. Like, I just thought everybody had their own business.
Yeah.
It started there, and that's where the entrepreneurial, I think, bug and spirit come. Actually, I know that's where it comes from, because if I wasn't raised by them, and I would have saw just that people go to work for a company or a corporation, whatever it is, then that's probably, I wouldn't be here today. Maybe, yeah. But maybe not.
Or it would have just taken you even longer. Because I know with myself, I had nobody that invested in real estate around me. I had an entrepreneur father, but it took me, until my mid-20s until I finally clued in that, hey, listen, like, I should start buying real estate. That's cool.
Yeah. But it took me a little bit to find real estate, though. I mean, I had done, I had a landscaping company. I had a personal training company. And then it's about 5 years ago, actually, that I started in real estate. And I did with multifamily. I took the scenic route. I started in the single family world. I was private lending my own money, doing some private money lending, and finally ended up into multifamily. And it's then when I hit multifamily about 2 years ago where I made the decision, okay, this is the thing that I am going to spend the rest of my life amassing for a multitude of reasons. Like we already talked about the legacy. We talked about the cash flow, the tax benefits, there's profit on the back end or even at refinance. But what we didn't even talk about is the opportunity to help other people get involved. And also we talked a little bit about the demand, but for me, and I'm not pretending when I say this, the why drives me. So knowing that I'm providing for a couple starting out in life, a single mom, a single dad, that I can provide safe, affordable shelter for them and create a community, that drives me.
Yeah, no, 100%. And, I think I would say the majority of all the successful investors I've had on the show, their why is always very, very strong and laser focused. They know exactly why they're doing it. So I'm really glad you brought that up. Yeah. So right now you're about 2 years into your business in the multifamily side. What is your biggest challenge right now in your business?
Luckily I've identified my biggest challenge and I'm taking action solving that. So, aside from it's a competitive market and finding a true deal, I mean, everybody's having that challenge. So I don't want to put that one out there. But my biggest challenge is, even though I've got 2 years under my belt, we're developing a track record of being solid conservative operators. The challenge is having the network of relationships, whether it be high net worth individuals, sophisticated, accredited investors, family offices, whoever it's going to be that own joint venture or, passively invest. It's having the trust and the credibility and those relationships in place. So we need more, just flat out simple. We need more of those relationships. Yeah. Those relationships take time. It's kind of like, you hear some people say, build a great business and then go out to the market showing what you've done. And that's the stage we're in. So it's kind of like the investors that came on board really trust. They really try to poke holes in the deal, which we always welcome. But they are what I like to call, essentially they're the first to hit the beaches with us.
And like your early adopters, yeah.
Right. They're the D-Day, like we're going to go and storm the beach and we're the first line. So we really need to perform and make sure, we quote unquote win the war for them. And that's it. But like I say, that's the problem. But the solution is paying your dues, putting in the time and building a real business. So I'm not sitting around saying, how can I get more investors? Don't get me wrong, you got to take the action, and I'm doing the right things to develop those relationships and be loud in a positive way in a legal way to let people know what we do. and start the relationships. So you got to take the action. I can't just say, well, in 5 years I'll go show everybody what we've done. No, you got to keep doing things in 5 years. You need to keep building the trust and finding these early adopters, the first ones to hit the beach with you. So knowing that was the problem and just accepting it and saying, it takes time. You got to pay your dues. That's it. And if fast forward, I talk about a 30-year more journey. If we're 10 years into the 30-year journey, we're having a different conversation.
Yeah.
I might have said, oh, it's deals. Like, we just can't find the deals.
Yeah. Well, we'll have to talk in 10 years, and then you can tell us all about your problems at that point.
That'll be, yes.
Yeah. Yeah. So let's go back in time, because you made the transition from single family to multifamily.
Yeah.
How did you have to change how you thought about real estate as an asset to make the switch between single family and moving up?
I had to change, first of all, from a very fast, short, and sometimes a quick profit, heavily taxed, I might add,
yeah,
to okay, this is, even on the short term, you hear people flipping apartments. That's a 2 to 3 year process. Then you hear people who we don't do, like, this is what we don't do major repositions where we won't buy a vacant building. But it could be partially vacant. We can put units back online and do a slight reposition, but not really what you would even consider, it could still qualify for agency financing. But anyway, so it had to switch from short, quick, heavily taxed profit to which, we call that investing. And essentially it's not. It is more like a job. Yeah. You're paying the highest tax bracket. Yes, you make a quick flip profit, but anyway, it turned into an investment mindset. This is long term. I'm going to bring in partners. We're going to do it together, and in 5 or 10 years we're going to see a big bump from our forced appreciation and a combination of just the market appreciation, because just like people who play the stock market, when you look historically, ultimately it appreciates. And the same thing with real estate, except it pays you along the way and there's some awesome tax benefits.
Yeah, for sure. And have you developed any routines or rituals that have helped make you successful thus far?
Yes, I have. So I also, again, being, raised by entrepreneurs, I am a senior business manager for a corporation. And so I run a medical device company. And I also run Edified Equity as operating on the GP side, as well as investor relations with my relationships and partners. So what I do is I separate the businesses out into 2, and I have certain things that I need to get done. I call it my musts, not my shoulds. And I actually there's nothing wrong with shoulds. Like, I have a shoulds list too, but the musts are the things that have to happen on a daily basis. And what I do is I have a sheet. I'm old school. It's actually paper. I have a sheet of paper with the check boxes, and I also have it's 24 hours just right in front of me. In all, from 12 a.m. to 12, it's all 24 hours are right there. And I do what's called chunking. And I chunk in my time to include sleep. So if I'm going to sleep 6 hours, 7 hours, 4, whatever it is, I'll chunk it. That's gone. I can't do anything because I'm sleeping. And then I'll say, okay, now on my check sheet, where do I fit in my must around my scheduled conference calls, appointments, meetings that are happening not on the regular, but they're scheduled for that day. It's like finding time, working both businesses in the nooks and crannies around family, other business, and sleep, basically.
Yeah.
And that's it.
Yeah. And do you find that it's necessary? Do you focus more heavily on one business one day and flip-flop, or do you try and go 50-50 throughout the week?
Well, because I think one of the things that has helped me with being successful is managing my time efficiently. Being very efficient with the use of my time. And I'm getting better with that as I mature through life. Like, there was probably, I want to say 5 years straight where I literally lived off of 3 to 5 hours. And it's more like that average of 4, with the exception of the weekends. And that was not fun, not healthy. Now I've learned with the chunking system that I use and my musts, I've learned to be more efficient with my time, and like literally everything is scheduled in so that I'm boom, boom, boom. But I flip flop throughout the day, all day, every day. There are times where you have to focus more on one, but for the most part, if you had to ask me, just give me one answer, I would say no. I'm back and forth, in and out between both businesses all day.
Yeah, no, that's a really good tip with the time chunking. I like that. So let's move on to a Keystone deal. So a deal that made a big impact on you and your business. Is there one that comes to mind?
Yeah, certainly. So there is one that comes to mind, and was a phenomenal opportunity. And the reason I would say this is my Keystone instead of like talking about like my first deal is because this is the one that I think I was able to add the most value to my investor partners on the limited partnership side, as well as the active partners on the GP side. So that's why I think this is my Keystone deal. And I'm happy to, answer any questions without violating, this is all for education. I'm not trying to get people to invest or anything like that. This deal is actually closed and operating. So it is what you would consider a tombstone, but we're not using it in that fashion. I'll keep it vague so people can't even really pinpoint.
For sure. Yeah, we'll keep you on the right side of the law.
Yeah, please.
Yeah. So, okay, well, fill us in on, how many units, what was the value add component that you saw when you saw it? Did you find it through a broker? Was it direct to the seller? That sort of stuff.
So one of the good things about us, our team, and this is by the way, that is how I have the luxury of operating in two businesses, having time for my family, doing a lot of thought leadership and things like that, is because it is a team sport. And, I did really good with that on the multifamily side, kind of because I was forced. If I would have tried to do it all and be a lone wolf, I would still be trying to do my first deal. So I have a great acquisitions partner who has the time and energy and ability, the resources to create relationships with brokers and our existing property management company. So a lot of the deals, including this one that we look at, are true pocket listings where it's either just us or maybe two other groups are seeing it, but it's not something on LoopNet or even going out to a broker's like VIP list. So it's either coming from property management, like word of mouth, like, hey, we did it like an odd and end job for this seller here, and found out they're selling. You guys should talk, stuff like that.
Yeah.
So that's how it came through. It was a true pocket listing from an existing relationship with a broker we've done business with before. So they were like, as a reward for closing on those, I know you guys are a great group. I'm going to give you the opportunity to underwrite it.
Nice. I like that.
Yeah, well, I like it too. I mean, I'm very fortunate to have that strong acquisitions component. And so it's a little over 100 units. I think you asked how many doors. So it's a little over 100 units. We look for typically 50, so that's 50 and above. And the reason I say 50 is because that's where we know it can afford third-party best-in-class management for that area.
Yeah. And when you were presented the deal, what really stood out in terms of the blinking light saying, buy me? Was it location? Was it, what was there?
So the price per door, when you looked at what the comparables, price per door wise, in that market were, in the high 50s, low 60s. And we came in, it's right around 47 a door. So right away, we're like, this seems right there. There's some value. Then the other thing that really stuck out, it was a new market for us. And so it's always a challenge going into a new market because you do your best to check references and check references of references when you talk about a management company. But you just don't know until they start operating and your asset manager starts going through line item by line item, month after month. So anyway, we dug into the market, and it was what it actually turned out to be, which was a very under the radar, undervalued, but emerging market. And the more we went local and granular, because this market is not being, it's not like Austin or Dallas. It's not where everybody's like, looking. So we wanted to make sure the population could support it. And then we wanted to see what was true versus what was speculation. So what did we know of the, quote unquote billions that were getting pumped into this area? What was going to happen for sure versus what we thought might happen. And when we separated that out, it was literally billions with a B, happening in that area. And we said, wait a minute, we like the size. We're starting to really like this underappreciated, emerging under the radar market. We love the area. That was the other thing. I mean, it's a C by vintage, but we're talking A minus B plus location. That's really good. So as we dug deeper and we said, this is going to be one of those. Now we need to underwrite it as if we called it a poised boom doesn't happen, and see if it pencils out. Because if it works, we're going to be really happy in 3 to 5 years. Yeah. And so it was the market.
Yeah, that's great. And so, you mentioned it was, a poised market. There was lots of development going to be happening. How do you approach that then and take that to your investors who may not be familiar with that market?
So one of the things that we did is when we send what we call our investor deal package, it has everything from the team, the track record, the history. Then we actually show them. We're going to serve it on a platter and say, now look, feel free to poke holes into it, but this is what we've discovered in our due diligence. Here's the economy. Here's what's happening with jobs. Here's what's happening in population. And we're going to tell them, this is the billions being pumped into this area. Here's and some of this is actually true to this one. Here's the brand new state of the art. I think it was like $92 million state of the art aquarium. Already broke, it's being built. Here are the top X companies that are coming in. U.S. Army Corps of Engineers just finished 7 years of due diligence, and they approved $750 million. So we show it to them and say, look, I understand when we first mentioned this city, you might say, really? But here's why we're going all in on it. And again, feel free to poke holes, because by all means, if there's something we're missing, tell us. I'm open to that. Yeah.
No, that's cool. And I like you mentioned that open communication with questions and poking holes. So how do you approach communication with your investors that might be a little bit different from everybody else? What makes you special in your communication?
Well, I honestly, I'm not 100% even sure what everyone else is doing, but I'll tell you what I do. So what I do personally is, all of my investors have this. They can text me or call me. A lot of my investors actually, investor partners live in Colorado. We can meet one-on-one, whether it be on the weekend or lunch or coffee, something like that. So we can go over something in detail. They have access to my email, and they also have access to my partners, like the team in general. So I don't know if that might be industry standard. I'm not sure. All I know is let's compare it, because I know this. Let's compare it to other investments like the stock market. So if I have $500,000 that I want to invest into a company that I believe in, and I go to and I hit all the disclaimers and I wire my money in, and now I'm a shareholder at XYZ, I know this. I cannot text or call the CEO and say, how's business? Are we liquid? Why was this in the red? Our investors, because they get the monthly, the quarterly reporting, that is done through email. But again, we always close it out with, if there are any questions, don't hesitate to reach out. And they do. So I think having that's a luxury that other investments do not have. Yeah. Now, I'm not saying other multifamily syndication teams, but I know other investments, like I say, in the stock market. Yeah. So I just think it's very personal. And that's the other thing I like about this investment as a whole, is that the operators have so much say-so over the outcome of the investment, and that's period. We have, if the stock market crashes tonight, on the first, our rent is still rent. That's what the leases say. So yes, we might have to eventually adjust our rent to do what the market's doing. But as long as we underwrite so that we're cash flowing way above that coverage ratio, we're going to be fine.
Yeah. Oh, absolutely. So since getting started in real estate investing and even specifically multifamily, how has your life changed so far?
I think real estate period, it definitely showed, especially at first, that there is some money to be made in the housing industry, whether it be single family, multifamily. It's, again, we are filling, whether if you're a residential redeveloper, again, I don't know if it's affordable, and it probably is safe, or you wouldn't be flipping in like a downturning neighborhood, but you're providing something that the market needs, and that's shelter. So there's going to be money for that because it's a need. It's not like it's something like I need to eat. I need to find a way to eat. I need this shelter above my head to keep me protected from weather and things like that. So, and feel the safe and comfort. I knew that, and then getting into the multifamily has really helped me turn on the marathon goggles, because that, not looking for the next flip, which again, that was more like a job. I need to find another one. And in 6 months, another one. It wasn't as scalable. With this, you get it up and running. We have an asset manager. We do our best to vet, especially in a new market, the property management company. Now it's a business. It's up and running and operating. We need our asset manager to make sure things are running smoothly. Other than that, we are free while this is operating to go and find more. Yeah. And that's what it's scalable. And it gave me the long-term marathon approach, because I'm not, even if I didn't have marathon goggles on, I would have to think in, at the very least, 5-year chunks instead of 6-month chunks when you talk about a single family flip, maybe.
Yeah, no, I absolutely. And so let's say, I know you've got that 30-year long-term plan. 10 years from now, let's just say a decade, where do you see you and your business being?
Yeah, in 10 years, it's going to be, I'm enjoying, that's the other thing. I think I'm really enjoying the process, like from getting started, which I kind of consider us babies in the industry in relative scheme of things, like to where if we would even have this conversation in 10 years, like we should, I think I'm enjoying that. I'm enjoying the challenges associated with it, because I know there are people opting out right now that in 10 years would say, I should have been the first to hit the beaches. I wasn't part of that D-Day, that swarm that helped win the war, because you guys pulled it through and you did what you said you were going to do. So enjoying the journey. But I think in 10 years, it'll be still enjoyable just as much as it will be when I can look back in 30 or 35 and say, I did what I wanted to do with my life. I showed my kids, I showed other people. And along the way, it helped me manage my finances in one of the best ways possible. I gave other people that opportunity, and I provided that shelter we talked about. Yeah. So I think in 10 years, I would just be sitting even prettier. And because by that time, the market is going, I hope by that time, the market is going to have done whatever it's supposed to be doing right now. And I'll say, we weathered the storm because we leveraged right. We locked for 7, 10 or longer. We were cash flow. I'll be able to tell you what my experience was going through a downturn as a multifamily owner.
Yeah, for sure. And, as you and I both know, multifamily is one of the most stable assets, if not the most stable asset in an economic downturn.
Mm-hmm. So, yep.
Yeah. No, this was great. So, Dino, if somebody's looking to check out your podcast, learn more about what you're doing, seeing the deals you're doing, how can they get in touch?
Well, to get it, I'm pretty easy to get a hold of. You can reach out on social. I'm active on LinkedIn. I'm active on Facebook. I have a closed Facebook group that, I have a podcast, a YouTube channel. So if you search either Dino Pierce or Edified Equity, it should come up, and that's the best way to get a hold of me and, plug into the content. I don't have nothing, not that there's anything wrong with this. It's just one of my personal goals in that 30-year journey is I'm not monetizing my content. So I just want to give and to educate. So wherever you find me, I won't ask for anything in return. So it's yours to have and enjoy.
Yeah, nobody likes YouTube commercials anyway. So,
right,
yeah.
Exactly.
Yeah, no, that's great. Well, Dino, just want to say thanks so much for the stories and the great tips today.
Yeah, thank you. Thank you for having me. I really appreciate it, and I look forward to talking in 10 years, if not before then.
We'll both be a little more gray on the side.
Definitely.
Yeah, no, that's great. And so to you, our viewers, I wish you well on your journey from purchase to profits. See you next time.